Hello, Gelato Familia. It's me, George, the Disney Italiano, coming to you at quarter after 5 in the morning, Pacific Coast time. I don't normally do this, but you know what? You know what? Let me just do it. We're going to go live at 5 o'clock in the morning. Because Disney's fourth quarter uh, earnings call, the final quarter of 2025 is today. So I thought, let's go live. I know probably, I'm not going to have a whole lot of people on this live. So far we have two, we have two people. First person in, Mr. Seymour Duck. Yes, you made it. Let's go. And of course, my babe, Abby, but she's still like comfortably laying in bed before she has to start work. Um, so yeah, as you can see, it's basically just us three, and it's probably going to be us three the whole entire time. Um, but that's okay. I knew it wasn't going to be a big audience, but I do know I did discuss this when Abby and I did our 20,000 sub live for Hollow Gelato, and a lot of people, were asking, with the quarterly earnings call, would I go live? And I'm like, I don't know. I mean, I was going to do a video, which I am probably still going to do a video with Mr. Seymour Duck if he's still up for it. We'll do a schedule thing, but they were asking if I was going to do live in real time as the earnings call was going. And I thought, I don't know if you guys want me to. And they're like, yeah, go ahead, do it. So I'm like, okay, all right, I'll go live at 5 o'clock in the morning. So yeah, this is going to be very interesting, but always welcome, even if you guys show up a little bit later, while the earnings call is still going on. Um, right now it's 5:17 a.m. Pacific time. The earnings call starts at 5:30. So I thought I would start the live like 15 minutes prior to the earnings call. And so yeah, just to kind of get settled in, um, and give people a chance to come in, before it actually starts. And when it does actually start, I'm just going to let it run through, and then we could sit and listen to it together in real time. And then after the earnings call is over, we'll come back and gather our thoughts of what was discussed, what was mentioned, and you guys could have my thought process on it. And yeah, and then we'll go from there. But so yeah, so to the three people that is with me, which is including Abby and Seymour, hope your morning is going well. I have noticed too that they've been doing the quarterly earnings like super early. The last, I don't know, I would say like what, the last year or so. Seymour, correct me if I'm wrong. I mean, they always did it early, but I mean, like they would always do it like 8:30, like Pacific time, and maybe like 11:30 Eastern time. But now it seems like they pushed it back a lot because I always remember going like already being up and awake for the earnings call. And we have Muggs A. Welcome in. So you are joining us for the fourth the Q4 earnings call. Welcome in and good morning. And depending on where you're from, I'm not sure if you are on Pacific time, East Coast time, Central time, and I do apologize. I usually do. I am a lot more spontaneous and more vibrant. So I do apologize if I am a little bit, you know, not myself, but I wanted you guys to see me. This is the real Italiano. Um, uh, at 5 o'clock in the morning. Let's see. Muggsy said, "When is it? I'm from London." Oh well, welcome in. Wow, London. We got someone from London. So it starts. Well, right now I'm on Pacific Coast time. So right now it is 20 after 5 in the morning, my time, and the earnings call starts in 10 minutes at 5:30 a.m. Pacific time, 8:30 a.m. East Coast time. So Muggsy, being that you're in London, what time is it over there? I usually know like a lot of the time zone times, but like at 5 o'clock in the morning, my brain is not fully awake yet. So what time is it over at London? I've never been to London, by the way. I always wanted to my cousin went over to London for she did like an internship when she was in college up at Slippery Rock. And but I always wanted to visit London. I hear that the people over there are very very friendly. 1:20 p.m. Okay, so that's a good time. Yeah, the earnings call will start at 1:30 your time. Yeah, so welcome in, Muggsy. Glad you're here. And actually, I believe I'm not sure if you've ever been on a Hollow Gelato live, if you were watching, and this is your first time actually, um, uh, you know, uh, communicating through the thing. So welcome in. Let's see. What do you think of Fubo? Can you remind what is Fubo? As I said, I'm not fully awake yet, so I've heard of Fubo. What's Fubo again? Just made an account to sub to you. Well, thank you very much. I greatly appreciate it, and um, welcome in. As I said, with Hollow Gelato, we cover like not just like theme parks. We cover Disney, Universal, Knott's Berry Farm, Disney cruises, but we also do a lot of out of theater reaction reviews for first run movies. We do a lot of dining reviews and oh yeah, of course. Yeah, I should have. Yeah, sorry, my brain is like off. Sports live stream merged with Disney 2 weeks ago. Yeah. Um, Thank you, Mr. Duck. Yeah, as an American over the top sports streaming television service. Yeah, I think honestly with Disney, it's kind of I think it's honestly the way to go. It's like that last piece of the puzzle. With like with Hulu and everything. So I think Disney had to have some format of a sports package to kind of go along with it because I mean the sports industry is huge. Um and even just people watching sports. So I mean, so you want to have a lot of people in different likings and demographics for your streaming service because you have to appease all, you know. So let's see. Do you invest into stocks like Disney? I do actually have a few stocks in Disney. Um, I always wanted to get more. I do know Mr. Seymour Duck. He's actually a big stock guy. I know he's had set like through several different companies and stuff because he knows like which ones that are better to get stocks than others because he follows like the trades and Wall Street and all that. So um but as far as for me, I do have a couple stocks in Disney. I do eventually want to get more. Um, but yeah, so I do like follow like the quarterly earnings and the shareholders meeting for the Walt Disney Company. And correct me if I'm wrong, Seymour. I believe did Nintendo just drop their earnings call? I believe so. Yes. Yeah. So yeah, as I said, Seymour is on it with the with like the earnings and all that. See here. Sorry, just getting everything kind of set up because it is almost time. I see. And Mugs A says, Seymour, do you invest into Fubo? I just bought 3K shares last month. Oh, wow. Awesome. Yeah, as I said, I knew it sounded familiar. Like I knew it had something to do with everything. But as I said, like just it being like me waking up at, well, actually, I didn't wake. I was up about like 4 ish in the morning. I was just kind of laying there because I thought I was going to sleep through my alarm. um, so again, I'm not fully awake. So, but Seymour says, nah, he has Nintendo though. Yeah. Yeah. Seymour is definitely big on Nintendo. And we got Dan in the house. Good morning to all. Welcome in, Dan. I'm actually, believe it or not, I'm surprised I actually have a small little group of you here with me. That's awesome. That's some commitment. What I'm gonna do, I'm gonna just share my screen just so it's up. Um, I got Jason Hill and us. It's too early still. Yeah, I hear you, Jason. Definitely. I hear you, man. And how you been? How have you been with your travels? I wish honestly, like I had like I thought I was a traveler, like Jason, like you are like the king of traveling. Which person in the chat, Mugs A, is from London. So he's in the chat from London. So I'm for sure, Jason, and you probably told me this like how many times, but like as I said, you've been around like everywhere. So probably you've been to London. I'm for sure at some point. Let's see. Headed to the parks this weekend for the Christmas stuff. Not looking forward to the rain. I hear you. We'll actually be there. We will be there Friday and Sunday, which I know Sunday also is, I believe, Dapper Day, and we were also going to be there for the reopening of Storybook and Casey Jr. But I don't even know if they're even going to reopen those because they're both outdoor attractions, and then they're like calling for rain all weekend. And then I don't even know what is to become of the Christmas story time with Deadpool because that was an outdoor venue thing. So we'll see. But yeah, if you're there, Jason, on Friday and Sunday, let us know. Yeah, we'll be there. Mugs A, when did you create your channel? So I had the channel. I started it when I moved out to California. I started it January 30th of this year. So on January 30th, in 2026, it'll be the 1 year anniversary. And I recently just did a kind of like a channel change and everything. And me and my fiance, both kind of mixed it in together with our Italian and Filipino culture, which is the name Halo Gelato for the desserts. Halo Halo in Tagalog means mixing it up, and gelato obviously as the Italian ice cream. So yeah. And Jason says, absolutely, we will have to meet up. Yes, absolutely. We definitely have to do that. So it'd be nice if we're all going to be torrential downpour. Let's do it together. Okay, so I'm gonna play. So I'm wondering if it started, because I know that they usually play like some music. I just don't want to get a copyright strike. So I'm gonna play it, and I'm gonna see if the music plays, and then I have to turn like the volume off.
To the Walt Disney
Okay, here
Company
we go.
fourth quarter 2025 financial results conference call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star then 1 on your telephone keypad, and to withdraw your question, please press star then 2. Please note that today's event is being recorded. I would now like to turn the conference over to Carlos Gomez, Executive Vice President, Treasurer, and Head of Investor Relations. Please go ahead.
Good morning. It's my pleasure to welcome everyone to the Walt Disney Company's fourth quarter 2025 earnings call. Our press release, Form 10-K, and management's posted prepared remarks were issued earlier this morning and are available on our website at www.disney.com/investors. Today's call is being webcast, and a replay and transcript will be made available on our website after the call. Before we begin, please take note of our cautionary statements regarding forward-looking statements on our investor relations website. Today's call may include forward-looking statements that we make pursuant to the safe harbor provisions of the Private Securities Litigation Reform Act of 1995. These forward-looking statements, including regarding the company's future business plans, prospects, and financial performance, are not historical in nature and are based on management's assumptions regarding the future and are subject to risks and uncertainties, including, among other factors, economic, geopolitical, operating and industry conditions, competition, execution risks, the market for advertising, our future financial performance, and legal and regulatory developments. Refer to our investor relations website, the press release issued today, and the risks and uncertainties described in our Form 10-K, subsequent Form 10-Qs, and other filings with the SEC for more information concerning factors and risks that could cause results to differ from those in the forward-looking statements. A reconciliation of certain non-GAAP measures referred to on this call to the most comparable GAAP measures can be found on our investor relations website. Joining me this morning are Bob Iger, Disney's Chief Executive Officer, and Hugh Johnston, Senior Executive Vice President and Chief Financial Officer. Following introductory remarks from Bob, we will be happy to take your questions. So with that, I will now turn the call over to Bob.
Thank you, Carlos, and good morning, everyone. This was another year of great progress as we strengthened the company by leveraging the value of our creative and brand assets and continued to make meaningful progress in our direct-to-consumer businesses, resulting in strong earnings growth for the company. Adjusted EPS for fiscal 2025 was up 19% from fiscal 2024. And over the past 3 fiscal years, we have delivered a 19% compound annual growth rate in adjusted EPS. Our strategy and portfolio of complementary businesses, coupled with a strong balance sheet, enable us to continue to grow adjusted EPS and free cash flow over time. For fiscal 2026, we expect to deliver double-digit adjusted EPS growth compared to the prior year. The expected growth in earnings and cash flow enable us to continue investing in our businesses and to increase our return of capital to shareholders. We are targeting $7 billion in share repurchases in 2026, double the $3.5 billion we repurchased in fiscal 2025. We're also pleased to announce that the board has declared a cash dividend of $1.50 per share, a 50% increase over the dollar paid to shareholders in fiscal 2025. Before we take your questions, I'd like to touch on a few highlights from the quarter. First, our film studios. This summer's box office once again demonstrated the global and cross-generational appeal of our storytelling and IP. To date, Disney's live-action Lilo & Stitch remains the highest-grossing Hollywood film at the global box office this calendar year, and its success has extended across our interconnected businesses and consumer touchpoints. The film achieved 14.3 million views during its first 5 days on Disney+, becoming the second biggest Disney live-action premiere on the platform ever. Retail sales for Stitch from our consumer products business also continues to grow, eclipsing $4 billion in fiscal 2025. The popularity of this global phenomenon underscores the franchise's enduring strength and the effectiveness of our strategy to invest in popular stories and characters. Over the past 2 years, our studios have delivered 4 global franchise hits that have earned more than $1 billion each, while no other Hollywood studio has achieved a single one during the same period. Additionally, with the strong opening of Predator: Badlands, the biggest opening in the franchise's nearly 40-year history, the Walt Disney Studios has now crossed the $4 billion mark at the global box office for the 4th consecutive year. Heading into the holiday season, we're excited to bring audiences Zootopia 2 and Avatar: Fire and Ash. Looking ahead, next year's slate includes numerous highly anticipated titles such as The Devil Wears Prada 2, The Mandalorian and Grogu, Toy Story 5, the live-action Moana, and Avengers: Doomsday. We saw strong viewership of our television content in Q4, fueled by series such as Alien Earth, FX's biggest premiere ever on Disney Plus and Hulu, Season 2 of High Potential, the #1 original broadcast series across all platforms among adults 18 to 49, the Korean global hit Tempest, and Season 34 of ABC's Dancing with the Stars, which made history as the only fall show to increase its overall audience for 6 straight weeks following a season premiere, something that's never been achieved by any show since Nielsen began electronic measurement in 1991. And we have more highly anticipated titles to come over the next few months, including new seasons of Paradise, The Secret Lives of Mormon Wives, Percy Jackson and the Olympians, American Idol, and the revival of the comedy Scrubs. We're also excited to bring viewers Taylor Swift's End of an Era docuseries, as well as the concert film Taylor Swift: The Eras Tour, The Final Show. At our entertainment segment, our streaming business had another quarter of profit growth, with operating income up 39% in Q4. For the full year, we hit $1.3 billion in operating income, up $1.2 billion from last year, and $300 million ahead of our original guidance. That is a significant achievement when you consider that just 3 years ago, our DTC business was running a $4 billion operating loss. As we continue to build DTC into a core growth engine, we're rolling out a more unified app experience to better serve our consumers and unlock new value. In October, Hulu became our global general entertainment brand, and we continue to work to consolidate all of our entertainment content domestically within a single app, which will simplify the user experience, highlight the full value of our bundles, and unlock global marketing efforts. We're also expanding our international reach by investing strategically in our own originals and working with local studios to license content that brings more high-quality local storytelling to the platform. We're taking a disciplined approach to the markets we are prioritizing, and we have confidence in our long-term strategy. Turning to sports, we ushered in a new era with the launch of ESPN's full direct-to-consumer service and enhanced ESPN app, making ESPN's full suite of networks and services available directly for the first time. We're thrilled by the response from fans so far, especially to the upgraded ESPN app, which now includes features such as multi-view, Sports Center for You, Catch Up to Live, and tools like live game stats, betting, fantasy sports, and commerce integration. Viewership of our industry-leading portfolio of live sports also remains robust, with ratings across ESPN networks, including ESPN on ABC, finishing the quarter up 25% over the prior year quarter. In our experiences segment, we delivered a record operating income for both Q4 and the full year, with operating income up 13% for the fourth quarter compared to the prior year, and up 8% for the full year. We're looking forward to 2 new cruise ships joining our fleet in the coming months, the Disney Destiny, which sets sail next week, and the Disney Adventure, which will become our first ship home-ported in Asia when it launches in March. This will bring our fleet to a total of 8 cruise ships. And in the spring, we're excited to open a World of Frozen at Disneyland Paris. With expansion projects underway at every one of our theme parks, 5 additional cruise ships scheduled for launch beyond fiscal 26, and a new theme park planned for Abu Dhabi, the strategic investments we are making now will help ensure our offerings remain best in class and appeal to audiences worldwide well into the future. Overall, this quarter caps another strong fiscal year for the company. We continue to execute across our strategic priorities as we build for the future, deliver the very best in entertainment, and create value for shareholders. And with that, Hugh and I will be happy to take your questions.
Thanks, Bob. As we transition to Q&A, we ask that you please try to limit yourselves to one question in order to help get to as many analysts as possible today. And with that, Rocco, we're ready to take the first question.
Yes, sir. Our first question today comes from Ben Swinburne at Morgan Stanley. Please go ahead.
Thank you. Good morning. Bob, I think we've been talking about ESPN going direct to consumer for, I don't know, it feels like a decade or so now, and you've got the product in the market. I know it's not been a ton of time, but I'm wondering if you could share a little bit about what you've learned so far in terms of adoption, engagement, anything interesting in terms of what kind of packages people are attracted to. And really the question is, does this product kind of change the outlook in any meaningful way for the business as you look out over the longer term? And I just want to ask Hugh on the cash from operations guidance that you provided with the $1.7 billion cash tax swing. If I sort of adjust for that, I'm getting kind of underlying growth of well over 20%. So is there anything else we should be thinking about? Maybe it's the one big beautiful bill tax benefits or anything else in the cash outlook that suggests such a strong cash flow year in 2026. Thanks so much.
Ben, I'll take the first part of your question. The ESPN launch has been a real success for a number of reasons. First of all, what we set about to do was to attract basically new users, people who had either been subscribers to the multi-channel linear bundle or people who had not, but wanted to engage more with ESPN. And we've done extremely well in that regard, signing up essentially new users. The other thing we wanted to do was we wanted to give people who wanted to stay in the multi-channel linear bundle a chance to use the app and to engage with us more deeply because the app has so many more features than the linear channels do. And the authentication rate of people who are already subscribers has been very, very encouraging. Third, we ended up signing up a substantial number of subscribers to what we call the Ultra product or the Ultimate ESPN product, which is essentially mostly attracting cord nevers, people who want to engage with sports, but maybe they don't want to engage as deeply as those that get linear channels or those that have subscribed to the main app. So it's been very successful in that regard. We're encouraged that people have found all the new features and are using them, particularly the Sports Center for You and what we call Verts, which is essentially just vertical sports highlights. And the algorithm seems to be working as well. I know it's working for me, where if you watch certain videos on ESPN, and particularly if you click like, then your feed is populated by sports news and sports highlights that you are more interested in. So I guess in almost every way you look at it, it has worked. It's also working for advertisers because obviously there's real value in the data that we provide advertisers on the direct-to-consumer platform. And so we're attracting both more advertising and new advertisers to the service. And as we look ahead, we believe that we've created a product that is very, very consumer-friendly, very advertiser-friendly, and actually works both for the traditional distribution ecosystem and for what I'll call the DTC ecosystem, if there is such a thing. So we're very, very encouraged. I think it's a very positive step for the future of ESPN because while nothing necessarily provides future-proof concepts or circumstances for a business that is constantly changing, but this certainly is a step in the direction of solidifying ESPN's future going forward. The last thing that I'll say is the great thing about the app is the incredible variety of sports that you can access on it. So where the linear channels provide obviously live sports and studio programming, more what I'll call along the lines of the traditional sports television, the new app gives users a chance to engage with thousands and thousands more sports events over the year. And I think that's not only a sports fan's delight, but I think overall it's about as consumer friendly as it gets.
Okay, Ben. Yeah, and I'll take the question on cash flow. You're right. If you adjust for tax, we're up about 28% year over year. Because of the timing on tax payments, the reported number is closer to 7%, driven by a couple of things. Number one, obviously, OI growth is quite strong. Number two, we've been investing for a couple of years, and we've now sort of leveled off in terms of those levels of investment. That's something that we think you can look forward to in the out years. Continued strong free cash flow growth from Disney, which obviously gives us a lot of flexibility in terms of the ability to return cash to shareholders, which was evidenced today by the doubling in the share repurchase and the 50% increase in the dividend. So we feel very good about the free cash flow growth going forward.
Thank you.
The next question, Carlos.
Thanks, Ben.
Before we take the next question.
Go ahead.
Yeah, go ahead. Before we take the next question, Carlos, I just want to add something to the question that Ben Swinburne asked about ESPN. One of the things that we're also very encouraged by is the fact that of the subscribers that have signed up to the new app, a substantial number of them, about 80%, have signed up to what we call the Trio bundle, which includes Disney Plus and Hulu.
Thanks, Bob. And thanks, Ben. Operator, next question, please.
Our next question comes from Stephen Cahill with Wells Fargo. Please go ahead.
Thank you. So just on content, you had a pretty strong last couple of years in general entertainment. Bob, you talked about some of the things like Alien Earth and FX that have done really well. As we look into this year for the studio, I mean, it's a big slate with Avatar and Moana. You're off to a little bit stronger or softer start, I think, implied in the guide for the first quarter. So I was wondering if you could just talk a little bit about what kind of growth you think you can do at the studio this year or over the next couple of years. And then, Hugh, just a tactical one, given the ongoing carriage dispute with YouTube TV, have you provisioned anything in the EPS guidance for a sustained blackout, or is the economic impact actually more minimal because you think those folks would resubscribe elsewhere, including maybe the ESPN app? Thank you.
Hugh, I'll take the first part of the question. Stephen, thank you. We're very encouraged by the studio slate that is coming up. In fact, we have a premiere of Zootopia 2 tonight. That is our Thanksgiving release. And then we finish the calendar year with Avatar, Fire and Ash. Obviously, we have very, very high hopes for that. And if you look at the slate for the rest of the year, it's about as strong as it's been in a while, maybe stronger than it's been in a while, including The Mandalorian, Toy Story 5, a live-action Moana, and then we're going to finish the calendar year with Avengers Doomsday. So we are very bullish on the slate ahead. As we look at the slate well into 27 and into 28, we feel that we've got similar strength to the strength that I just described for fiscal and calendar year 26. Obviously, not every film works. We know that. We've been around long enough to understand that. But if you look back at the year and you look at the fact that we've already crossed substantial global box office level, we feel that we had some real strength, $2 billion films in the fiscal year, the biggest film of the year, fiscal 2025 and calendar 2025 to date, which was Lilo and Stitch, which also had tremendous consumption when it went on the platform. So we feel good about the direction of the studio, both the current slate, the slate that's coming up, and what it looks like in the future.
Right. And Stephen, just to add to Bob's comments, in terms of Q1, that's more about what we're overlapping rather than the slate for the year itself. Just the timing of the overlap, particularly with Avatar coming at the very end of Q1, is what's driving the guide that we shared with you all. As relates to the discussions with YouTube, obviously, I'm not going to comment much on ongoing negotiations that are live right now. The only thing I would say is, in terms of our guidance, we built a hedge into that with the expectation that these discussions could go for a little while. In terms of the dollar impacts, keep in mind there's two pieces to it. There's the piece that we're not getting paid for, and then the piece that we're picking up by virtue of subscribers moving elsewhere. But beyond that, I don't want to comment because it is a live negotiation right now.
Thanks, Steve. Operator, next question, please.
Absolutely. Next question comes from Robert Fishman at MoffettNathanson. Please go ahead.
Good morning, everyone. Bob, as we think about Disney Plus as a portal to all things Disney, can you talk about the future roadmap and how subscribers will be able to use Disney Plus as a super app for not only Hulu and ESPN that you start to talk about, but also engage with your parks and other assets? And then, Hugh, do you see a path ahead for sustained double-digit DTC revenue growth through a combination of subscriber engagement and advertising increases? Thank you.
Thanks, Robert. First of all, regarding Disney Plus, we're in the midst of rolling out the biggest and the most significant changes from a product perspective, from a technology perspective, since we launched the service in 2019. And we're really encouraged because it's enabling greater personalization, resulting in a product that's just more dynamic, more engaging, and it's working. And as I mentioned in my remarks, we've turned Hulu into a global general entertainment brand, which we think is going to create more awareness and basically create closer alignment with our U.S. product. So as we look ahead, these things are obviously all designed to create a one-app experience, but we also see, particularly with the deployment of AI, the opportunity to use Disney Plus, as you suggested, as a portal to all things Disney. There's clearly an opportunity for commerce. There's an opportunity to use it as an engagement engine for people who want to go to our theme parks, want to stay at our hotels, or want to enjoy our cruises, our cruise ships. And obviously, there's a huge opportunity for games, and the investment that we made and the agreement that we reached with Epic Games, while that will largely be on their platform, gives us an opportunity to integrate a number of game-like features into Disney Plus. The other thing that we're really excited about that AI is going to give us the ability to do is to provide users of Disney Plus with a much more engaged experience, including the ability for them to create user-generated content and to consume user-generated content, mostly short form, from others. So a lot going on. We're pleased that the progress that we've already made from a technology perspective. We've made some great hires, by the way, in the last year in that regard, including Adam Smith, who's also brought in some real talent. And the opportunity here, we think, is enormous in terms of increasing our engagement with Disney fans across the world.
Okay, and Robert, regarding your question on DTC, a couple of comments. Number one, obviously, we guided you to the double-digit margins as we've been talking about in the past, and as was expected coming into the year. Number two, in no way are we going to get there through cost cutting. The way we're going to get there is through revenue growth and through driving operating leverage through the business. We didn't give a specific revenue guide, but our objective and our aspiration is very much to be growing the top line of that business by double digits, as we did on an apples-to-apples basis in Q4. That's what we're looking to do going forward, is to grow the top line double digits. And again, as a reminder, and as we've discussed in the past, getting beyond 26, we're certainly looking to gain margin in chunks, not in basis points, as we think beyond 26 and into the future. We think this is a terrific business that's really going to be super strategic for the Walt Disney Company, and is going to be a growth driver for us for many years to come.
Thanks,
Thank you
Robert.
both.
Operator, next question, please.
Our next question today comes from Jessica Reif Ehrlich with Bank of America Securities. Please go ahead.
Thank you. I got a couple things. One, you've grown content via both building and buying, and clearly if we're going to see M&A in media in the coming year, with a lot of moving pieces across the industry, some companies being broken up. So I'm just wondering, do you see any role for Disney, and if not, any concern that you'll see a stronger competitor coming out of all of this? And then secondly, on advertising, could you maybe go a little bit under the covers? There are a lot of things going on in DTC and linear, both entertainment and sports. Could you give us some color on your outlook for fiscal 26? Thanks.
First part of the question, Hugh.
Go ahead, Bob. Sorry.
Go ahead.
So, Jessica, on M&A, a couple things. Number one, obviously, we don't comment on M&A specifically. That said, with what's happening in the industry right now, Bob and the team really built the IP portfolio that we have over the last decade, whether it was the Fox acquisition or Lucas or Pixar. So we actually feel like we've got a great portfolio, and we don't need to do anything. From that perspective, I think we'll let this play out. In terms of other competitors, we'll see how the various moves play out, but we like the hand that we have right now, so I wouldn't expect us to participate in making any significant moves. As relates to the advertising side, what you saw for the year for us last year was advertising grew 5%. Sports was particularly strong. DTC obviously has had supply coming into the market. That said, we did see CPMs improve at Disney over the last 2 quarters, so we feel like that's trending in the right direction. And then from a linear perspective, obviously that's driven by what happens with subscribers. Going forward, we do expect advertising growth going into 26 as well, despite the fact that we're overlapping political advertising in the first quarter of 26. So.
Thanks, Jessica. Operator, next question, please.
Thank you. Our next question today comes from Michael Morris at Guggenheim. Please go ahead.
Thank you. Good morning, guys. Wanted to ask you first on the experiences business. Can you talk a little bit more about the drivers of the segment into fiscal 26, in the context of that high single-digit operating income growth that you guided to? So, how is demand currently trending, and how much of the guided growth comes from revenue as opposed to margin expansion in the coming year? And if I could ask one on the sports side, you talked about some of the content-driven cost pressure in the second and third quarters of the year. I would assume that comes from the NBA investment. Can you talk a bit about how the NBA investment is positive for you and will drive your growth over time? Thank you.
Okay. Yeah, happy to jump in on both of those. In terms of the experiences business and drivers for 26, obviously we've made big investments in cruise, and we're expecting cruise to be a meaningful contributor to growth of experiences during the course of the year, particularly in the second half as we get past the launch costs and some of the dry docks that we have in the first half of the year. Number two, obviously we're always going to have a combination of some pricing and some attendance growth. So certainly feel positive about that. And then obviously with the slate that we have coming on the film side, consumer products ought to be a meaningful contributor as well. As far as sports goes, from the perspective of the NBA, because of the timing of the rights costs, it does create a little bit of bumpiness during the course of the year. Again, the latter half is where we'll really see material growth in ESPN. And then in terms of NBA being a contributor, the NBA is obviously a phenomenal property. We were fortunate enough to get out in front of that and create an attractive deal both for the NBA and for ourselves. It obviously, like a lot of other live sports, attracts audience, and in the case of the NBA, like the NFL, attracts scale audience, which obviously is super attractive to advertisers and therefore is strategically beneficial to us as well.
Thanks. If I could follow up, can you share anything about what you're seeing on the demand side currently domestically for the parks in terms of advanced bookings or per caps?
Yeah. Sorry, I forgot to answer that portion of your question. Bookings are up 3% in the first quarter, so feel good about that. And they're also up for the year. So feel good about where demand is right now.
Great. Thank you, Hugh.
Yep.
All right. Thanks, Mike. Operator, next question, please.
Thank you. And our next question comes from Kannan Venkateshwar with Barclays. Please go ahead.
Thank you. Bob, any interest from you on becoming a broader bundler of streaming? You already have ESPN, Disney Plus, and Hulu bundled, and of course you also have Fox One and HBO. And it feels like there's an opportunity here for Disney to maybe emerge as a new form of bundler, which nobody in the industry appears to have attempted yet. So any thoughts on that would be great. And then just to understand the impact of ESPN bundling on Disney Plus and Hulu a little bit better, anything you can share with respect to maybe the churn benefits or any kind of subscriber acquisition cost tailwinds that you saw in the quarter, or what you expect going forward potentially from that? Thank you.
So I'll answer both parts of your question. First of all, as it relates specifically to ESPN bundling, what we've found is that subscribers that bundle, either that bundle Disney Plus and Hulu, or subscribers that bundle Disney Plus, Hulu, and ESPN, are healthier subscribers in the sense that the churn rates are lower than the subscriber that only subscribes to one app. So when I mentioned earlier the fact that about 80% of all the subscribers to the new ESPN service are actually buying the trio or the triple bundle, that's a very positive sign for us in terms of lowering churn into the future. We've also found that bundling with others, for instance, we've been bundling with Max in the United States, also has an effect of lowering churn. And we've expressed the desire to do more bundling with other companies and have been in discussions on and off with other companies about doing just that. So typically the opportunity to bundle definitely exists, and to bundle more exists. And we also have proven that it works both for us in terms of our subscribers and also for the subscribers that we attract for the bundling entity. If you were to ask the folks at Warner Brothers Discovery about the impact of the Max bundle on them, they would tell you that they've signed up a substantial number of subscribers thanks to the bundle with us.
Thanks, Kannan. Operator, next question, please.
Absolutely. Our next question today comes from John Hodulik with UBS. Please go ahead.
Great. A quick follow-up on the parks business, and then a question on cruises. It looks like domestic parks attendance was a little light in the fourth quarter. Hugh, is that driven by sort of competition, macro, or are there any other factors that may have accounted for that? And then on the cruise side, just comment on overall demand for the cruise business. And could you remind us, how do the margins in cruises compare to overall margins in the parks business, and what should be the impact on that segment as that business grows as fast as it's slated to over the next several years?
Okay. In terms of the demand was I wouldn't characterize it as light. It basically came in line with our expectations. We've talked about Epic in the past, in particular, as something that we knew was going to be a factor in domestic parks, and in fact was very much in line with our expectations. If anything, it seems to be in fact impacting the rest of the competition down in Florida more than it's impacting us. From a consumer perspective, we certainly feel good about it. In terms of demand for cruise, very, very strong, despite the fact that we've added as much capacity as we have. Our utilization rates are in line with what we've seen in the past. So we're filling all of that capacity as quickly as we can add it. Regarding margins, we don't really talk about specifics on cruise margins. That's not a disclosed item. But obviously, it's a very attractive business. We're capable of pricing it at a good level. The guest satisfaction scores are higher than basically anything else in the company. So the margins in that business, as you would imagine, are quite attractive.
Thanks, John. Operator, next question, please.
Absolutely. Our next question today comes from Kutgun Maral with Evercore ISI. Please go ahead.
Good morning, and thanks for taking the questions. Two, if I could. First, on direct-to-consumer, I was hoping you could share some of the puts and takes on the cost side in 2026, especially as you continue to invest in technology and programming. But I didn't know if there were some maybe cost savings associated with integrating the tech stacks, for example, that we should be mindful of. And then, Hugh, just a housekeeping one, if I could, around the 53rd week. Thank you for providing a clean guidance for the year and on an underlying basis. With that, can you help quantify the impacts of the extra week to this year? And as we look to fiscal 27, would the expectation be that you could grow EPS double digits again, even without adjusting for the 53rd week comp? Thank you.
Yeah, first on DTC. It's really consistent with what we've talked about in the past. So we expect to grow revenue at an attractive rate. As I mentioned earlier in the call, our aspiration is to be double digits in that business. In terms of then the line items underneath, we'll obviously continue to invest at a reasonable level in content, leaning a bit more towards the international side as we identify opportunities in specific markets to grow the international business where we have a big opportunity. In addition to that, we'll be investing in product. So the technology area will get some level of investment as well. And obviously, as we put the two businesses together, there's opportunities to do a bit of savings on SG&A. That said, I would expect P&L leverage, in other words, expenses growing less quickly than revenue across all of those items, which is how we drive the margin growth that we would expect to see. In terms of the 53rd week, again, I would expect us to figure out as we get to Q4 what the 53rd week is worth. And then as we determine that, as we have in the past two times we've had the 53rd week, we would share something on that with investors, and we'd look to grow double digits off of that.
All right. Thanks, Kutgun. Operator, we have time for one more question.
Thank you. And our final question today comes from David Karnovsky with JP Morgan. Please go ahead.
Hey, thank you. Bob, you noted generative AI earlier, but it sounded primarily as a use case within your apps. And I'm wondering how you view the opportunity or risk to license out content or IP to some of the emerging video creation platforms. And then just relatedly, as it pertains to production costs over time, what role do you see for generative AI to drive cost efficiencies in the business? Thanks.
Very good question. We've been in some interesting conversations with some of the AI companies, and I would characterize some of them as quite productive conversations as well, seeking to not only protect the value of our IP and of our creative engines, but also to seek opportunities for us to use their technology to create more engagement with consumers. And we feel encouraged by some of the discussions that we're having. It's obviously imperative for us to protect our IP using or with this new technology. And we've been pretty engaged on that subject with a number of entities, and I'm hopeful that ultimately we'll be able to reach some agreement, either the industry or the company as on its own, with some of these entities that would, in fact, reflect our need to protect the IP. We also, as we look ahead, we see opportunities in terms of efficiency and effectiveness by deploying AI, not just in the production process, but really across our company as we engage with our cast members and our employees, but also our guests and our customers. There are opportunities, as Hugh talked about earlier, about what I'll call the office and creating efficiency there. They are great opportunities in terms of our collection of data and our mining of data. And I'd say, above all else, there's phenomenal opportunities to deploy AI across our direct-to-consumer platforms, both to provide tools that make the platforms more dynamic and more sticky with consumers, but also to give consumers the opportunity to create on our platforms. I also, before we end the call, Carlos, I just want to say one thing, because I know there was reference to where we are with YouTube, and I just want to end the call because we've been so engaged in this over the last few weeks by kind of giving an overall summary of just where things stand. First of all, obviously, we care deeply about our consumer, and our priority has always been to remain on their service without interruption, to close a deal on a timely basis so that interruption does not occur. The deal that we have proposed is equal to or better than what other large distributors have already agreed to. So we're not trying to really break any new ground. And while we've been working tirelessly to close this deal and restore our channels to the platform, it's also imperative that we make sure that we agree to a deal that reflects the value that we deliver, which both YouTube, by the way, and Alphabet have told us is greater than the value of any other provider. So we're not trying to break new ground. The offer that's on the table is commensurate with deals that we've already struck with actually distributors that are larger than they are. We're trying really hard, as I said, working tirelessly to close this deal, and we're hopeful that we'll be able to do so on a timely enough basis to at least give consumers the opportunity to access our content over their platform.
Thanks, Bob. And thanks to everyone for your questions. We wish you all a good day.
Thank you. That concludes today's conference call. We thank you all for attending today's presentation. You may now disconnect your lines and have a wonderful day.
Sorry, I was on mute there. Okay, so that closes out the 2025 with the fourth quarter earnings call of the Walt Disney Company. For the most part, the numbers look pretty good, pretty healthy. They definitely seem like they're growing and inclining, especially like with Disney Plus, with the streaming platforms. As far as like with linear television, as I said, that's kind of like the dark horse and everything. I just feel like, as I mentioned in the comments, that linear television is pretty much a dying breed at this point. No one really knows what to do with it. But eventually I think it's just going to just disintegrate into nothing, really, eventually in time. I did feel like at the end, I felt like Bob kind of had to recover what his comments were about the question for YouTube and like the deal that's going on. And again, I do respect the fact of obviously they can't give anything, any kind of specifics, while the deal is in motion. But I do love how he kind of went back to it just to kind of like reconfirm, like being kind of vague, but at least giving like a final, before the call was over, like just to say, we're trying to get a deal made and everything. But it's funny how he kind of had to like backtrack that a little bit. Matthew, welcome in all the way from the UK. How worried would you say you are for Disney? Honestly, I'm not worried at all, Matthew. I think honestly there's there's obstacles and hurdles for any company. I think honestly with the numbers that they're showing now, I think they're just going to project over time, and I feel like that they're getting back into that groove, especially with all the the unforeseen happenings of 2020 and everything. And I think that hurt a lot of companies and businesses and what have you. So each sector of the Walt Disney Company seems to be doing very well, in my opinion. That's what I got out of the earnings call. So let me catch up here with some of the comments. Let's see. Do you guys think Fubo is a good deal for them? I personally feel like it is. I feel like I mentioned it a little bit earlier before the earnings call started that uh, Disney had to get into some realm of sports networking and what have you, because it is a very kind of dog eat dog world in the sports division, and Disney needs a little bit of that piece of that pie, so to speak, because uh it's a growing market. And when you're dealing with a streaming service and what have you, that their competitors have some sort of format of that as well. So I think Disney really needs to showcase with that. Let's see. And what do you think they should do to protect themselves if Universal acquires Warner Brothers? I think honestly they just have to just keep doing. Good question, Matthew, by the way. They just have to keep doing what they're doing and what they know best and what is like the Disney brand and the Disney formula, so to speak. I will say, though, if Universal does acquire Warner Brothers, they definitely have a little more of a obstacle, like I was mentioning, because they definitely would have a catalog of IPs that they could utilize. But I would say probably they'll cross that line, if so, when that would occur. I see Kiki and Luca says YouTube TV needs to ESPN. And Mr. Seymour Duck says parks and streaming did well. Yes, I agree. I feel like those numbers really hit. And I think also by some of Bob's comments that, he mentioned with next year's slate with Toy Story 5 and The Devil Wears Prada 2, they recently just dropped the teaser trailers, and I'm for sure they dropped them. That was not a coincidence before, everything closed for the earnings call. So they wanted to get those teaser trailers out, so they can kind of back up to what they were going to talk about today. Abby and I did do our first reaction review of those teaser trailers for both Toy Story 5 and The Devil Wears Prada 2. They will be releasing very soon. And also, he did mention we did get to see last night Predator Badlands. So we did do an out-of-theater reaction review of that as well. That will be releasing also on Holo Gelato. So definitely look out for those 3 videos. And then, of course, mentioning like Zootopia 2 coming out later on. Now, of course, that's going to lean more into the first quarter of 2026. But I think that would be like a good, first starter of the year, kicking off as far as the studio side with Zootopia 2 and Avatar Fire and Ash, along with the other subsequent movies coming out, with The Devil Wears Prada 2, Avengers Doomsday, and the live action Moana. So there's definitely a lot on the horizon for that. As far as for the parks and cruise line and experiences and everything, again, doing very well. It's great to see that there was a 3% in bookings. And someone did mention, I think it was Kiki and Luca. Let me go back up here a little bit. Where'd that go? It was a comment about the parks. Where'd it go? Oh, here it is, Kiki and Luca. Unfortunately, they cut our parks budget so they can pay for the other stuff that loses money. Yeah, I mean, I'm for sure like they do a lot of like balancing, of things of how they can offset. That's what like a lot of companies, do. Yeah, so I'm for sure, without a doubt, they do that. But as far as like the 3% goes of the bookings, that's good. Also, too, with the new Disney cruise ship, the Disney Destiny, that just got christened, it's coming online next week. So that looked really well for the experiences as well for the Disney Cruise Line. And then the Disney Adventure coming online in Singapore in March of 2026, and then 5 more cruise ships, later on in subsequent years that would bring it to 13 cruise ships I think it was by like 2030, 2031. So yeah, the cruise line is definitely booming for sure with that. Let's see. Kiki and Lucas says, I'm a huge sports fan, and you have to have ESPN. Yeah, absolutely. Yeah, it's whether or not, a person is a huge sports fan, as a company, and especially when you're in the market of streaming and everything, you have to have ESPN and stuff like that. Let's see. We have been hearing bad news about both sectors, but they are doing well. Yeah, that is very true, Seymour. A lot of people, that say that, Disney is dying. It's crumbling. And everything. And yes, they're going to have their ups and downs. With the numbers in the market and everything. But I mean, clearly, with the earnings call, I mean, the proof is in the pudding. The numbers are doing well. Jason Hill says, I'm worried about the cruise line with 4 ships, 9,000 people sail each day. With 8 ships, they have to find 30,000 people to sail each night. That's a big jump. That's interesting. I'd never really broke those numbers down. So let's see. With 4 ships, 9K people sailed each day. Yeah. So basically, okay. So with 8 ships, it's 30, and then when they hit 13 ships, what number would that be? That probably would have to be an even bigger jump. Let's see. I guess Disney can't allow the sheer size of Universal / Warner Brothers to intimidate them. Yeah, they just got to keep doing what they're doing. And yeah, and as I said, competition is healthy. It keeps them on their toes, keeps them striving and striding for, more better quality product, in their company. And as I said, once that deal is done with Warner Brothers, if Universal does acquire it, then whatever Universal decides to do with it in strategy, then Disney can utilize and piggyback off that strategy for their strategy to go against Universal and Warner Brothers. Let's see. I finally stopped renewing my Magic Key because of the cost. One day, the increased cost will affect attendance. Right, or maybe not. Yeah, it's hard to say right now, Kiki and Luca. But again, you have to pick and choose, your battles of what you want and what to add in, your financial budget and everything. Disney's going to keep doing what they're doing as long as people keep on, forking out the money for it, and they're not going to make no changes. They're not going to adjust anything, even though that they are for the consumer or shareholders or they're a business first. They got to keep their heads above water, and they're just going to keep doing what they're doing. And I wish that they would add a little bit more features as prices keep increasing. But until they start to see the decline in numbers of people buying stuff and renewing and stuff like that, and subscribing, depending on if you're referring to the parks or the streaming service, then Disney would then have to kind of reevaluate, maybe not do a significant drop in price, but maybe do something to offset said price with something. Theme park conductor says, I agree with you, George. If Universal acquires WB, it's going to be huge. Yeah, it will be. It'll definitely be a big one in the books. I would even say, even though it was 71, what was it, 71 billion in stock for Disney to acquire Fox, but that was still a historic purchase, not just by the number, but the fact that Disney purchased Fox, after acquiring, Pixar, Marvel, and Lucasfilm. So to actually see on the other side of the spectrum of Universal making a purchase of Warner Brothers, that would be another historic buy for sure. And Matthew Murr is saying to Kiki and Luca, they've got to get a deal with FY25 hashed out as soon as possible. Yeah, I think that's why they're kind of going through all the motions right now. And yeah, as I said, they got like deals going on in all different sectors, so hopefully they can get stuff like together. And we also got Vegas Disney RTV in the house. I wish these investors would be more like fans and ask about Disneyland Forward or Westcott. I'm right there with you, Vegas Disney. Like, if I was on that conference call, I wouldn't, I'd be saying like, okay, what's the next big project coming to Disneyland after Coco and Avatar? Or when is the Avengers campus expansion opening? Like, or what's the name of the next Disney cruise ship? I'm right there with you. Kiki and Lucas says a $20 credit is not enough. I canceled my YouTube TV. Yeah. I mean, you got to do what you got to do, and sometimes, they just give you like little nuggets of like, oh yeah, here's like a consolation kind of thing, and sometimes it's not enough. Let's see, Jason Hill, I do agree as well with the cruise lines. Let's see. And he continues, I'm worried about the cruise line. With 4 ships, they need 13K sailings each night. With 30. Oh yeah, that's what I read. Okay. Jason, if you're still in the chat, do you know, like, once they're caught up with the 13 ships altogether, what would it be? YouTube TV is overplaying their hand here. Yeah, absolutely. And Matthew Murr says the Seymour Duck, they just have to keep up the narrative of Disney dying at literally any cost. Yeah. Let's see. I don't believe a full boycott of the Walt Disney Company could actually work in yielding a new CEO. It's extremely, very extreme, in my opinion, and it's just wishful thinking. Yeah, no, I'm not saying like a boycott of the Walt Disney Company. I think it's just if people come together around the same time and they just cut costs of the things that are overly expensive that they just can't afford anymore, because eventually it's probably going to get to the point where if they keep raising prices, people can't afford it. And it's not the fact that people want to boycott it, it's the fact of that they just can't afford it, so they have to cut things out. And I feel like that's when Disney would have to come in and say, okay, are we going to do something about it where we can get those people back, or do we just keep moving forward and just, get the cut of, the numbers that people aren't renewing their stuff? Let's see. This would be a good time for Disney to try to push Fubo and take market share from YouTube TV. Fubo might need a new name though, Disney TV. Yeah, I think in time, like, Fubo will probably become, a different name, like, Disney TV or Magic TV or something, along the line, Pixie TV, something along the lines. I don't know what it is. Like, every time I hear Fubo, it reminds me of the clothing company Fubu, that's run by Damon John from Shark Tank. I don't know why. It's just like every time I hear Fubo, I think of Fubu. Kiki and Luca, are you guys going to watch Predator? It was really good. Yes, we actually did get to see it yesterday. Our out of theater review will be coming up soon, along with our first reaction to the teasers of Toy Story 5 and The Devil Wears Prada 2. So 3 videos will be coming out on Holo Gelato. So definitely look out for that, Kiki and Luca. And my thought process on it, I'm not going to spoil it because I want you guys to watch the video of I was very surprised with Predator Badlands, and I'm not going to say if that's good or bad, so you'll have to watch the video to find out. Excuse me. Or Fubar. Yes, exactly. That's another good one. Fubo, Fubar, and Fubu. Sounds like a rhyme, like winking, blinking, and nod. But yeah, I thought it was very successful. I'm very curious to see, like, as the quarterly earnings continue when things start not reopening, but like new projects are opening, like through the parks and experiences, through Disneyland, Walt Disney World, new Disney cruise ships coming online, the Disney Plus, growing, and then also, with ESPN and also the Hulu bundle, and then, possibly having a deal with the YouTube TV and like cutting off linear completely, and with, Fubo and everything. Everything just has to be a well-oiled machine, and they just have to get all their ducks in a row. No pun intended to Mr. Seymour Duck. So, I have to actually say this was actually very enjoyable. I didn't really know how well this was going to go, to do a live, with the quarterly earnings call. I think I'm probably gonna. I can't promise everything that I'd be able to do it all the time, but I think when I get the chance, I may want to do some lives during the quarterly earnings call. So I'll definitely probably be doing this again, and I also will be doing the shareholders call as well, because that one, especially the next one, is going to be very detrimental to the direction of where the company will be going once Bob steps down as CEO and they make the announcement, which I think we're all kind of knowing it's going to be Josh tomorrow. And I am very curious with you, Kiki and Luca, of how Josh will be able to finagle and answer these questions as CEO during the earnings call. But if he has a person like Hugh Johnson by his side, Hugh does very well. And I'm for sure, he's getting, the schooling now and kind of like watching and listening and taking notes. So I definitely will be probably doing a live with the shareholders. And as I said, I'll try to do more of the earnings call, because it was actually very successful. A lot of you guys showed up and had a great conversation, and we all listened to the call together. So it was definitely a lot of fun. Let's see, Jason Hill, with 13 ships, they'll need 50,000 passengers each night, but I assume the Magic class will be retired by then. Yeah, see, that's interesting, because they keep pushing the fact of saying, by 2030, 2031, we'll have 13 ships, online and what have you. But that is true. By 2031, is the Magic and the Wonder still going to be around, or if they're bringing these new ships to kind of offset it. But that means that, they're hyping up 13, but that means if we lose the Magic and the Wonder, we go down to 11, unless, by that point they'll announce 2 more ships that would bring it to 15, but then we lose the Magic and the Wonder, and then we break even with the 13 ships. Maybe that's the case. But 50,000 passengers each night, that's a huge demand. And that's interesting how you break that down. I never really thought of that, because when you think of just the bookings and like the number of cruise ships, well, yeah, but it's the demand of how many people they get on each ship per sailing, per night, per stateroom, and you break all that down. That's very interesting. But in any case, I want to thank you all for joining me this morning. This was actually a very early morning live stream. As you can see, it's starting to get a little lighter now, but I think I'm going to try to catch a little bit more Z's before I start the day. But actually, I kind of already started the day, so I get to relax a little bit, but I want to thank each and every one of you, Jason Hill, Mr. Seymour Duck, Kiki and Luca, Matthew Murr, all the way from the UK, Vegas Disney RTV, theme park conductor, my babe Abby, as usual, Dan, let's see, and then we also had a couple newcomers in that came in. Max Herc, definitely welcome in. And then in the very beginning of the live, we had let's see, Mugs A. So welcome in to everyone. As I said, this is Hollow Gelato, so definitely feel free to engage. If you have any questions, comments, ideas, please throw them our way. We greatly appreciate all feedback, a constructive criticism, positive feedback. We definitely take it to heart, and so we can bring better, more higher quality content for all of you. And and any ideas or suggestions for future for content, definitely let us know, because again, we take it very seriously. And so we will definitely consider doing that as well. See, Kiki and Luca says Johnson definitely competent, grizzled, and smart veteran. Yeah, when they added Hugh to the roster, like, he knows what he's doing. He's a good business guy. And correct me if I'm wrong, Kiki and Luca and Seymour, I think you guys know he came from Pepsi, correct? I think that's right. I think it was Pepsi. But yeah, I think a person like you, like his foundation and his knowledge, and implement it to the Walt Disney Company is extraordinary. So I think anyone who steps, into the hot seat of CEO as Iger steps down, I think having Hugh by their side is definitely a win-win. And Seymour Duck just confirmed, yes, he was from Pepsi. But in any case, I want to thank you all so much for joining me this morning on the quarterly quarter four at the end of 2025 for the Walt Disney Company. As I said, I will be doing more of these, of the quarterly earnings, and definitely the shareholders, as I said, especially the next one, because that one's going to be very important. But in any case, thank you so much. I know I keep on repeating the same thing over and over again, that, we greatly appreciate you all. And, but again, it's always a big thank you, because we really do enjoy the support from all you guys. Let's see. Josh will be okay as long as he lets Johnson talk instead. Yeah, he'll probably learn, as he goes along, and let Johnson, run the course. And Mr. Seymour Duck said, I had a blast. Yes, thank you so much, Seymour, for joining. And Kiki and Luca, thanks, guys. See you later. Take care, everyone. As I said, I'm going to get a little bit more sleep. And I'll see you guys on the next live. And definitely, again, keep an eye out on the content. As I said, we got 3 videos that are going to be coming out. The teaser trailer reactions to Toy Story 5, The Devil Wears Prada 2, and our out-of-theater review of Predator Badlands. So definitely look out for that. Let's see. Really quick. And then we got Scarlett here. I wonder when Disney begins accepting crypto and maybe buys crypto or crypto mines. That's interesting. I'm not sure if they would go that route. Definitely something to think about. But Scarlett, welcome in, and glad to see you. But and I hope you enjoyed the live and you're able to catch, the quarterly earnings call. And for anyone that may be just tuning in that missed the live, I greatly apologize. Definitely hit the notification bell for more lives, and then you can always go back and watch the replay as well. And actually, Kiki and Luca says, good point, Scarlett. So I assume, Kiki and Luca, that you think that would be, would that be a good decision for the crypto or crypto mines? Because I don't think the company really has ever really dabbled in that. Let's see. Probably a lot of liability with crypto, though. Yeah, I mean, yeah, I can see that. But I mean, it's definitely something for them to think about. Like, as long as it's, I guess done, with care, so to speak. But in any case, Kiki and Luca, thank you. Scarlett, thank you. And thank you for joining in. As I said, we greatly appreciate you guys. And I'm George, the Disney Italiano. And as I always say, in Disney Italiano fashion, stay safe, stay healthy, stay Disney. Italiano out.